All right, been a while since I've done a video. We're going to review the NQ trade that I took and closed on 10/23/24, but I actually opened the positions on Tuesday and or Tuesday afternoon and Tuesday evening. I had two positions on this trade, and we're going to go over those now. Quick update: I'm getting tired of day trading with Top Step. I prefer swing trading, and I'm going to switch to CFDs to trade for the perceivable futures until I can swing trade the amount of contracts that I want to on the NASDAQ on futures. And so that's going to require me to have at least $300,000 in an account to swing trade on the NASDAQ. But for the perceivable future, I'm going to be trading NOS 100 on the CFD. So through KOT Forex, if you're looking at the broker, that's just the broker that I chose. Doesn't matter what broker you choose. You can trade whatever you want. All right, but without further ado, let's go ahead and get into this. So the trade was a POI refined reaction. That's just how I'm notating this trade. So essentially what that means, from the 4-hour, I saw a point of interest and refined it and went through the system that I employ to set up my trade idea and execute my trade. All right, so from the target 4-hour liquidity, which is shown later in the charts review. So from the macro perspective, my bias was bearish on this. Momentum is bearish, as you can clearly see, just based on price action from the top of the leg here, moving down, versus this is very jagged, and this is very smooth. All right. So that's the first thing. The third thing is that the bullish break of structure, which occurs here, right? But I'll show that on the next chart. So that's just essentially that. I mean, that's pretty simple. But getting into the current area based off of, well, actually, let me back up. Let me make sure I'm crystal clear on why I chose bearish bias. So as you can see, I marked this range up here as a bearish range. Now, we're moving into the premium side of this bearish range, and as you can see, price action is beginning to contract. It's very, very slow momentum bullish. And so as I was seeing price move into the premium, I wanted to identify selling opportunities. Now, understanding that yes, the NASDAQ, yes, the Dow, yes, the S&P 500 are bullish long term, but currently this is what I'm seeing from the macro perspective. And what I consider macro perspective is the 4-hour perspective. I don't look at any other charts to frame, or any other charts higher to frame up my trade setups. I look for structure on the 4-hour time frame. I look for points of interest on the 4-hour time frame, and then I refine from there. All right, so let's get that out of the way. So yeah, I'm seeing this bearish and we're moving into the premium. So because we're in premium, automatically I look for sells. All right, so moving on to the next chart. Current price range, like I said, we're in the premium and following, let's see here. Yeah, following bearish or highs and lows trend. What I've noticed was we have a high, right? We have a low, we have a high, we have a low, we have a high. Then we break this low here, create a point of unwillingness here, and pull back here. And that's essentially where I took my trade. All right, so that's what we're going to get into here now. So, like I said, 4-hour had the break of structure, which to me indicated that I want to start looking for a selling opportunity. So I'm coming up with a new concept called the risk range, which encapsulates many of the concepts that we've learned here in RCV in general. Still figuring it out, ironing out the details of how I want to present it. But for right now, just think of it as a point of interest in whatever. All right, so essentially I just chose my 4-hour point of interest here, and I wasn't convinced. The reason why I chose this, as you can see, the first tap of that point of interest happened there. I chose this as a point of interest because I wasn't convinced that this was the actual point where we were going to move away from the trend, right? I didn't think this was going to do that. Yeah, I lost my words there. All right, so cool. So anyway, moving on to the next chart. So essentially, once I found my point of interest, you know how this goes. I refine. So initially, what I do is I find my inefficient pricing, sponsored candles, starting from the high of my point of interest down to the low of it to see and follow order flow. So if there's nothing happening up here, everything looks mitigated, everything looks balanced, I just keep moving down, right? So I go down to the 15-minute time frame and I see inefficient pricing here. So what I end up doing is I mark 50%, right? And I mark the open. But my stop loss, usually if I'm going to execute or just in general look inside to refine inefficient pricing in this case, I'm going to use the open or the close of this candle to identify that. So really my range, as notated by these two horizontal rays, will be my new refined risk range that I've notated here, right? So now I'm looking in that area. And because I saw that in my refined risk range, 50% was untapped. I also executed on the 15-minute here because when I went lower to the 1 minute and seconds time frames, nothing really made sense to me to execute off of or frame up a trade on. So I just included all of that risk if there was going to be something inside of that 15-minute area, which is why my stop loss was a little bit larger than I would have liked on this trade setup. All right. So the next one, like I said, 50% was untapped, whatever. And ultimately, the trade ended up like this. So we got the reaction from the 15-minute interest. We got a little bit of drawdown here, but ultimately did not go up and mitigate or stop me out of the trade, and chose my target for the 4-hour low here and price over, I think, just a little over 16 hours, maybe, right? So that's 4, 8, 12, 16. Oh, I lied. A little over 24 hours. So almost a day, essentially almost over a day, ended up gaining profit on 2 trades. So my first position actually was this one at 450. And my second position, which I didn't mark up here, but it's okay, I'll show you now, was actually based off of the reaction from the risk range that I had marked up. And so essentially what I did, I was laying in my bed at the time and I was getting ready to go to sleep, but something told me, Brendan, wake up. There's opportunities in the market. So I woke up, right? And so this was essentially, this area here is that reaction from price for I got my first position, so about 450. Yeah, 450 on the dot actually. And so what I saw here was high, low, and that second high low after this break of structure generated a range because we failed to break this low here. So I marked up a range, bearish range, scalp range here. And essentially, like I said, I look at 50% and above. So I was pretty out of it at the time when I took this trade or took this position, but I decided to just go ahead and look at it and say, hey, I want to look at 50%, and went down to the 1 minute time frame. And I wanted to see if there were any opportunities inside of the 1 minute time frame to frame up a trade setup. And ultimately, what I ended up doing, because I wasn't really, paying too much attention to it, I just decided to take the entire 50% or the entire premium side of this range as my risk. And so I took a trade that was half of what my lot size was up here at 450 and put it here at 400, and my stop loss was at 434. And so price ultimately came up, tapped it, went a little bit higher, mitigated something, which I didn't care to look for at the time. Probably some sort of inefficient pricing in this area. Actually, now I'm curious. Did it actually do that? Okay. Yeah, so it didn't tap that inefficient pricing, which means it probably wasn't inefficient pricing. But yeah, I'm not going to go deep into it. But yeah, that's what I did for that. And so I ended up with 2 positions. One was at 400 and one was at 450. And both of those, as you can see, went straight into profit, all the way down and tapped that 4-hour target, which was essentially this low here. All right. Yep. So excuse my scatterbrain. It's been a while since I made a video, so I'm not as hacked as I want to be. All right, so yeah, so that essentially that's what I did. That's what a trade I made. Ended up making 600% gain on the account. I risked about over the two positions 25% of the account that I was trading, and made about 660%, if I remember the math correctly. And yeah, it was overall a great trade. It made sense to me. All of the influencers or confluences lined up. So once that happened, I was very confident in the trade and took the trade. So I'm also looking for a continuation just based off of how price action is going now that we've established that we have here a high. I don't want to do that. It's not the one I wanted. Here, I'm actually going to do this. Copy. Paste. All right. So yeah, so I'm looking for a continuation. So this is kind of like an outlook and a trade review. But now that we have high, low, high, potential low, and so now we have a range here. And so I'm looking for this pullback, and immediately what stands out to me is 50% here. And so if you saw those two black lines on my trading view, I'm looking for a trade in this region inside of this risk range here. Yeah, so we'll see if it plays out, and ultimately this will be another swing trade if it does play out. Aiming first target would be that low, but that's not my ultimate target, and I'm not going to share that. But yeah, without any other blabbering, that's the trade setup. Hope you guys learned something. If you have any questions from RCV members, hit me up. I'll be happy to explain it more in depth and a little bit more coherent. Peace.